for joining us today. I guess where we might start, and where there has been a lot of chat over the last 2 years really, as to where we're at in the cycle. We've been in a record bull run for airlines, and it's been a very positive environment for lessors. But what are your views as to where we sit currently and where we're going?
Well, I think that it's pretty clear to everyone that the cycle has been really long, and given what's happening with the bankruptcies in Europe, with all the political tension we have globally, tariffs, trade embargoes, all of that, and some tension also in the Middle East, I think it's pretty clear that it at least looks like we're at the end of the cycle. I think there was a really interesting presentation this morning about the global GDP that is definitely looks like it's going to be slower next year. And even though that may not really, it's not so relevant for the US, because the US economy is doing really well. And honestly, for aviation, for airlines, 40% of that market is the US. But nonetheless, the rest of the world, China, Europe especially, are slowing down. So I think it's pretty clear that the cycle will slow down. I don't know whether it's going to be a complete downturn or just a slowdown. It's not really clear. I think it all depends on what happens to oil prices, to interest rates, to the strength of the dollar.
And you kind of look at those macro factors, and I think if we were here 12 months ago, we would have said, we're in an environment where interest rates are ticking up, and oil was probably a little bit more volatile 12 months ago. Whereas you look at those two macro factors, and they probably turned more positive, I'd say, in the last 12 months. I think your point is very valid, and who knows if there'll be some kind of black swan type thing that will push a particular event. But those macro trends, and probably, would it be fair to say that the trade wars piece and the US, who are in dispute with China, now that's moving towards the EU. Would you rank that as possibly high up in the list of disruptors that are there that might push a downturn sooner?
Well, I think that that's a real big one because of the volume of trade between the US and China. So clearly we've already seen it because the cargo traffic is really slowed down. And that could and I think that's the beginning of the trade issues coming up. And I think that if they can't work it out, I mean, this morning there was some good news about perhaps there might be some positive movement there, but I think it's really difficult to tell what's going to happen because a lot of this is political. And now with the MAX kind of being thrown into the mix, where there's a lot of, I think, negotiations and posturing on both sides of the US and China. So it's really, these are like very difficult to actually tell. So it's really hard to say that I'm 100% sure that it's going to go this way or that way. And then equally with oil prices, again, it's one of those things that's very hard to predict, yet it's something that really impacts the aviation market, I'd say, more than the trade war.
And how does that factor in when you're coming at it from a rating agency perspective, when you have those uncertainties? How do they feed into how you're viewing the aviation market?
Well, I mean, in rating agencies always look at the stress scenarios. So I know we get accused of doing it when things are really good, but I think this is when it starts making sense. We run stress scenarios on economies, on interest rates, on a variety of things that could impact the market. We stress aircraft values by quite a bit depending on what kind of aircraft they are. So all of that goes into our modeling. But there's also a qualitative aspect to it. For example, we take, leasing companies, we rate them a whole category higher than airlines because the structure of that business is very different from airlines. When there's trouble in one part of the world, they can take their aircraft, move it to another. And that's been borne by, track record. Even in crisis periods, they've done really well.
And has that been a structural shift? So if you went back 5 years ago or 10 years ago, has that inverted? Was it a case that, because you've got more, and not rating agencies, maybe investors more familiar with the asset class, do you think that's what's helping lessors have that slightly higher positive outlook than airlines might?
No, I think lessors have always been structurally stronger than airlines, and the reason for that being is that their businesses are global in that they lease to global airlines. I mean, you have to be big enough, of course, to be diversified to get benefit from that. Airlines, on the other hand, they have their own limited market. Even if they're American airlines, that's still a single airline with a single balance sheet and profitability. So they're a lot more exposed to these kinds of things, oil prices, interest rates, a lot of labor issues that they have to deal with. And of course, as customers of leasing companies, the leasing companies are exposed to that. But they have more levers, I think, to mitigate those risks. But in terms of structural shifts, it's an interesting question that you bring up. I think that there's been a structural shift in the airline industry. And it started with the US with consolidation. I feel like technology has had a lot to do with it, where you see, like when you get on an aircraft, it's almost always full because they've really learned ways of cutting costs, because that's the one thing that the non-fuel costs, that is, they have control over, and they're getting better and better at it. They've been much better at managing their leverage. They've delevered many of them. And I think that and the consolidation, of course, has helped a lot. And because of that, the US airline industry has gone through a structural shift. I think that there's still a lot more to do in Europe. That's why you've been seeing all these bankruptcies, because there are just way too many airlines, too many hubs in Europe. And it's not surprising that some of them are dropping off.
I think that's where I was actually going to go next, which is spot on, in that you'd say the American market, as you say, is operationally smarter, has gone through that period of consolidation. And if you look at the more recent, you say, airline bankruptcies, they're primarily European driven. What will push maybe the European market, do you think, sooner into a consolidation wave? If you're near the top of a cycle and your profitability, will it take a relative downturn to actually inspire more consolidation in the European level?
I think that the downturn will be a good, that would be definitely a way to do it, but you don't even have to have a downturn, and it's already happening. And I think that a lot of it has to do with the fact that there is big disparity amongst the legacy carriers in Europe and these more LCC airlines, especially those whose business models were not, they thought it was going to work and it didn't. I'm talking about the like cross-Atlantic LCCs, and that model just doesn't work, and it didn't work, and they had to go away. There are other examples too, like you have the more state-owned airlines like Alitalia, where there was just too much, cost in the system. Yes. And then you have Thomas Cook, which was not because of the airline, it was because of the hotel business and other businesses that they weren't able to make it. I think that one of the things you see in Europe that's interesting, that you see more and more bigger carriers taking over these low-cost carriers, because then they can benefit from the network much better. So then they can be saved. I mean, of course, they're going to also cut routes, probably cut flights down, but you definitely need rationalization in the European market.
And on the lessor side, where you've seen probably a push by a number of lessors to get to investment grade, in considering a lessor and trying to get to investment grade, what are the key factors that you look at in ranking, like the key metrics in order for them to get there?
Well, we're one of those agencies that I would say the two key things. One is the qualitative factors that we pay a lot of attention to. And the reason for that being is that these are really monoline businesses, and they're really, when you think about it in the greatest, in the bigger context of the world, they're very small businesses. So it's very important that you have a very strong management team with track record and seasonality, because if you're not seasoned, you need a lot of relationships with airlines, with banks, with OEMs. It's only those people who know how to maneuver this pretty complex system of aviation. And And then that on the quantitative metric, the most important thing is leverage, obviously, because debt to equity for these really big, high capital intensive companies, debt to equity is a real key quantitative factor. On the investment grade side, I think that because liquidity is very important to leasing companies, and to any company for that matter, liquidity is what usually brings companies down. One of the things that they've really, in the past few years, the leasing companies have made a big effort is to try to unencumber their balance sheets, and that's really helped a lot with the investment grade profile of most of the leasing companies, and most of them are trying to get up there by trying to do unsecured debt rather than secured debt.
And that split between secured and unsecured, and talk about kind of 70% ratio and getting there. Do you think that is the standard that needs to be achieved? And if it is that likely to continue to need to be the standard that will need to be achieved?
We take a slightly different view on that. We don't have a specific number that we go by. First of all, this whole idea of unencumbering assets has to do with the fact that from a ratings perspective, I want my assets to be unencumbered to cover my unsecured debt. The ratio of unencumbered assets to total assets doesn't cover all of that, because if you don't have that much unsecured debt and more than 70% or less than 70% of your balance sheet is encumbered, it doesn't mean that you're covered or you're not covered, meaning like it's really the senior unsecured debt volume that matters, not how much secured debt or you have or you don't have. So for us, that's a much more important ratio that we look at. And then when you also look at that each business model has a different dynamic. If you're a leasing company that only does sale leasebacks, it's okay to have a secured portfolio, because in fact those are all match funded. If you don't have a lot of unsecured debt, it doesn't really matter. And you have a lot more flexibility in this match-funded debt. So in a liquidity crisis, you don't have to worry about it because you don't have big bullets coming in. But for aircraft leasing companies that have order books, it's even more important. And I think those ratios don't actually capture the risk in those kinds of companies, because they need to be stronger for those kind of companies, because they have a lot of PDP liabilities.
Yeah, no, I think that's fair. And looking maybe at the funding split, or how lessors are, tapping into whether it's the unsecured market or the capital markets at the moment. We've seen that the ABS market is extremely receptive to aviation at the moment, and a small portion of the overall ABS market, but you've gone from nothing maybe in 2013-14 to over $7 billion last year, probably on the up this year. What's your view on the ABS market as it currently stands for aircraft, and where it might go in the medium term?
We think it's still going to be very strong, because not only a lot of the leasing companies use the ABS as a fleet management tool, and as their fleet age, they do ABS to try to sell those portfolios. But also now you're starting to see you're at the part of the cycle in the ABS where there's going to be a lot more refinancing of those previous deals. So in fact, this year we've seen a lot of refinancing done. We still think it's going to be pretty strong. I mean, especially with almost every leasing company setting up a sidecar in order to be able to do that, yet take advantage of the management of those portfolios, even though they had an outright sale in most cases, with like a little bit of interest perhaps.
And that sidecar piece is interesting, because it is a theme you've seen where you have had established lessors, taking in new investments. And as you say, the ABS market, if it's a full refinance, you're still going to be taking service fees for a period of time. And you're seeing more lessors moving to that. I imagine because of the lease contraction, you're saying, well, revenues driven out of asset management are just as good.
They're better.
Well, this is it, right? Do you think that will be a more established trend, that a move into sidecars, a move into JV structures, to push that broader mix between lease revenues and asset management
I
fees?
think, based on my discussions with leasing companies, I think it's absolutely true. Every leasing company has figured that out. But when you really think about it, the proportion of those asset management fees are still very small.
Yeah.
Versus what they're really in the business which is renting aircraft.
Yeah.
So but it certainly helps, and it's a really zero capital intensive business. It's just a fee. So, yeah, I think it's a really move. But is it going to be like 20% of their revenues? I doubt.
Yeah, I think that's fair, right? But and you look then at how, I suppose, lessors are in this environment where you've had a proliferation of lessors in the market. You know, the amount of lessors owning more than 50 aircraft has ballooned, and far more. You would say a small lessor, but it's probably still got a couple $2 billion balance sheet. We had a significant amount of M&A, but large scale M&A has tailed off a little bit. What's your outlook on that space? So if you look forward to the next 12 or 24 months, what do you expect to see in the leasing community from an M&A and a consolidation perspective?
I think the consolidation will be happening more at the smaller end.
Yeah.
The larger end, there's not a lot to do, frankly, because now we've got these really top 3 big lessors, and I think that most lessor management teams understand that beyond a certain number, it's also not so easy to manage. So I don't think they want to go above 40-50 billion, and I think that's what stops it at the top end. But there is still some opportunity. You know, everybody talks about GCAS, who knows?
Yeah.
Even though there's like some, they're divesting bits and pieces of it. But definitely at the lower end, I think you're going to see, and especially in China, you're going to see a lot more of it.
Yeah, it has appeared in China where, again, you're ceasing to see new platforms, and it would appear that if they're not getting to the scale, if they can't get to a CDB, if they can't get to a calc, they appear to be exiting the market, Ping An being probably the more recent example. Would you see that trend line continuing, or do you think there's a chance that more Chinese money might come back in?
I mean, given what you read on the GDP levels of growth for China, and also just their political rhetoric about not wanting money to leave China the way it did before, I doubt you're going to see a huge amount coming in. You know, they invested a really large money in platforms, really. I would think that you may see more bond investments, which is at a much lower scale than like buying big platforms. On the other hand, you see Japan picking up.
Yeah.
That's like where it's going so far this year.
Because I was over in Japan last month, and what was interesting, and you've seen JOLCO, JOL market.
Oh, there's so much of that.
Come back really strong, more and more rangers in that market. I think what was interesting is now the regional banks are looking a lot more closely at the sector and how they can invest into it, and fund structures. So SMBC had their fund, DVB have tried to get away with a fund. Do you think that Japanese investment piece, you've had ACG, Tokyo Century,
right, ORX,
yeah, of course, right. Do you think that's a trend line that continue, or and what is really driving? And this is probably a more broader question, right? Japanese interest in that sector?
Well, the Japanese used to be very interested in this sector, but they pulled out. I think that their interest is driven by their own nearly negative interest rates. Yeah. Because it's one sector that they can, gain some traction in terms of yield, and then because of the tax laws in Japan with the JOL and the JOLCOs. A lot of the corporates, which have nothing to do with aviation, are taking advantage of the depreciation curve for these deals. So I think that a lot of the arrangers of these kinds of deals have really picked up their activity, and they're doing a lot more esoteric type transactions. And there was also a change of tax laws in Japan in March, where it's actually created a little bit of a double-edged sword, because so you can be a U.S. airline and do a JOL or a JOLCO but your debt has to also be placed in Japan.
And I think that's leading
Yes.
into regional bank interest.
Yes, I
you're
think
spot
that's
on,
what's
yeah.
happened. In fact, I think I understand that one of the recent JOL ABS deals that was done, the debt was placed with the Japanese bank.
Yeah, and
Yeah.
you would have had the Stratos transaction,
Yes,
which
that's what I'm talking about,
which
the Stratos,
was kind of in the ABS market very interesting,
Very,
blending two
yes,
things.
JOL and
Yeah.
ABS, yeah.
And it does feed into, I would say, an interesting theme, because we talk about, when we've had these discussions with persons like yourself the last couple of years, it was very much navigating the cycle, and then we were into tackling headwinds. I wonder, is there something now about innovation in the market? Because it has always been, or appeared to be, a sector that innovates in relation to finance, and whether that's JOL and JOLCos or AFIC products. Is that something you would see that the sector has been able to do, to kind of find different ways to bring in different types of investors and funding?
I mean, certainly, and especially if there is a tightening of the cycle, you're going to see more of that.
Yeah.
Because, you go to the sides to try to gain some, arbitrage, I suppose.
Yeah, of course.
But you definitely have seen it in the Japanese market. I think in the global market, AFIC was a major innovation, and now all the other OEMs are setting up similar programs. ACG has their own program.
Yeah.
The issue is that they're all competing with each other. So, but I think that the Japanese market is really interesting, because maybe I've been paying more attention to it recently too, is because it makes overall cost of issuance for airlines much lower.
Yeah.
Especially because even the debt buyers in Japan don't have as high a hurdle as like the non-Japanese buyers. On the Chinese side, they have higher hurdles on debt, so that might be something that prevents them from actually investing in too much debt. But that's why they've been really mainly investing in equity platforms, invested equity in platforms.
And on the US side, we've seen, obviously in the ABS piece, most of the anchor investors have been US private equity.
Yeah.
And there seems to be an increased appetite for US private equity for aviation. Do you see that as a trend line that will continue?
I think that we've seen this last year, we've seen quite a bit of big private equity firms actually buying airlines outright, or having big stakes in leasing companies, or in these JVs with the sidecars. It's funny, because 5-6 years ago, I felt like the trend was moving. I felt like some private equity firms were exiting because they did, and now you have another round of new ones who are taking big interest.
And is that really more information about the asset class and the maturing of the sector, or what's driving that re-peaking of interest?
Yield, I think.
It's chasing returns.
Yes, I think it's one of the few sectors where, from an equity perspective, if you're very smart, you can have very good yields.
Yeah.
I mean, you can see it in the ABS market for sure.
So that wall of liquidity is searching for a home.
Yes, and then I think on the non-ABS part, the lack of price transparency on the aircraft is a major component of that.
Yeah. And maybe just as a final question, just to throw it to you, your outlook broadly on the sector. I know we talked about the cycle and where it's at. If you said, still at a macro level, you're hoping to have greater than 5% growth, the factors and all the capital amounts that need to be funded, and yet there's all these macro headwinds. Where do you think, if we sit down in 12 months, we'll be talking about the aviation sector as to where it sits?
It's one of those questions.
We won't play this back to you in 12 months.
Right, yes. As long as you don't hold me personally responsible.
Absolutely not.
Single-handedly, because I'm going to be wrong, I'm sure. But I guess, the way I look at it, it's more like I don't do heavy statistical analysis around it, only because it's very difficult to tell. But you do know that there are so many people still out in Asia who've never flown. That is it's a fact.
Yeah.
Right? So traffic growth has to go up. I think what may be a catalyst for it to not be as profitable as it would be is as you see Asia coming in with their own aircraft and their own OEMs, which are not, they're not going to stop.
Yeah.
And I think that's what's going to have a little bit of an impact on supply, so that supply-demand balance may shift, which is probably in the more longer term or medium term perhaps. But in the next 12 months, short of having some major external effect, I think we'll be probably, because now they're saying it's higher than 6%, so I think 5% is safe.
Yeah, great. Well, listen, thank you for your time.
Yeah,
Really
thank
appreciate
you.
it.